welcome to myself, Max from Beanstalk Global. Fascinating broadcast today with an old contact of mine. Not that Craig is old, but an old contact in the sense of a business relationship. Craig McBain, say hello to everyone, please.
Hi, everyone.
Craig, where are you today?
I'm in South Africa. Outside of about 20 kilometers outside of a town called Nelspruit, which is on the eastern side of South Africa, quite close to the Kruger National Park. And it's what we call the low veld, subtropical area for fresh produce. Surrounded by lots of farms growing avocados, macadamia, banana, citrus,
it's a gorgeous area.
Mangoes. So and I happen to live on a nature conservancy, which is quite nice.
Fantastic. So let's give a bit of a background as to this this broadcast. Because Craig and I have been mulling this for Craig. It feels like 2-3 months. There's such an uptick happening in the respect of the attraction towards investing in fresh produce internationally that I wanted to lean on Craig and his expertise, so that we can have an open discussion, open debate. And today's going to be very much about investing in Africa. But again, let's just give a bit of a background. I don't know if some of you have already picked up the last couple of weeks, the planned Dole Food merger with Ireland's Total Produce will give a combined entity that will be the largest fresh produce supplier in the world, with 10 billion US in revenues. Over and above this merger, in the last 3 to 5 years, there's been a considerable interest in the international fresh produce sectors from investors. And there seems to be 2 key factors that have driven this growing interest: weakness in traditional global commodities like corn and soybeans, and huge consumer demand for fresh, healthy food, and even more so on the back of COVID. And that's this desire for fresh produce is set to further increase. This is going to combine the appeal of investing in ag fresh produce because of the potential diversification opportunities as well. But how can you find the information and the potential trends for you as a potential investor, or just if you're in the sector and you want to find out more, to make informed decisions, or to be able to network with those that will be able to assist you within international fresh produce investment? So if you're in these sectors, be that running a business or as a potential investor, Craig and I have set up this broadcast and podcast on LinkedIn, YouTube, and on our podcast, so we can lean on the industry expertise of Craig McBain to give us a view of what he's seeing and what future trends may be approaching us all next. And as we do future broadcasts, we're going to bring other guests in from other country areas, whether that be Russia, or whether that be the US, or whether that be South America. So Craig has participated in and led change in a number of organizations across multiple industries. Prior to founding his own consultancy business, Percy, he headed up a vertical integrated multinational agricultural fresh produce business with operations in South Africa and Europe. The business was involved in the production, sourcing, packing, value adding, distribution, and marketing of a range of subtropical fresh produce, with supply partners in numerous origins in South America, Central America, Europe, and Africa. Craig not only developed deep insights into successful investment models for numerous high-value crops, but was also exposed to the vast investment opportunities that the likes of sub-Saharan Africa provides for long-term investors. He's also worked in private equity as the CEO and co-investor in a platform build-up, and his formative careers were spent as a process engineer and then in management consultancy. Craig, why did you get into the mad world of fresh produce? With your background in consultancy, you could have gone into engineering. You could have gone into pharmaceuticals. Why fresh produce?
Well, I started my career in engineering, so I was a process engineer with Fluor. My career has been in four parts, I guess, almost equal timelines: engineering, process engineering, then into management consulting. Got exposed to a lot of industries in that part of my career, and then got drawn into the private equity space, and so I got exposed to mergers, acquisitions, et cetera. And but actually, my passion throughout my formative years has always been in agri. Growing up in Zimbabwe, my father very heavily involved in agriculture, and I got the opportunity to join a multinational fresh produce business, head office in South Africa, but we had significant marketing operations across Europe. And yeah, what a wonderful company, what a wonderful journey with them.
It's do you remember how we met?
I do indeed. So you were driving down through Africa, and with your, I can't remember your friend,
yeah,
on your Triumph motorbikes, and we hosted you at the founder of this company, at the founder's house, which I think might have been built in the early 1920s or so. And yeah, it was wonderful to meet you then and learn from your experience of driving through Africa.
So Craig, I don't know if you know the backstory. So we went on this oddity of riding two Triumph motorbikes from London to Cape Town to excite and educate kids about where fresh produce comes from. So we did 18 countries, 18,000 kilometers. And we were getting into South Africa, and it'd been an amazing journey, but also been quite torturous. And on that particular day that we met up at your head offices, we'd done something like 600 kilometers to get to you. And we were both knackered. We were both tired. We arrived at your site. We had two of your lovely team waiting for us outside. Gareth dropped his motorbike on himself, and he got trapped under the motorbike with his ankle slightly twisted. We managed to get that off. We then came inside into those lovely offices, and we were offered, I think it was a Danish and a cup of coffee, and we were absolutely toast, as we say in the UK, really tired. And then we got brought into your boardroom, and I can't remember how many of you and your colleagues were there, but it felt like half a dozen. Then we went for it. It felt like about an hour, because you were very interested in what we'd seen, and also just getting a world's eye view of the fresh produce sector. So I found it. And this happened so many times on the trip that we were doing these huge mileages, and then we were having to sing for our dinner, as my father would say, and make sure we were on top of our game to be able to tell you what we knew. But yeah, there's one of the best days we had at the guest house afterwards, when you've done 600 kilometers a day after day, and then you have silk sheets and proper food and cold beer. It was joyous. Yeah, that's right. And if you have not visited South Africa, it is God's own country. You must go out there. So Craig, investing in ag is. We were just saying in our green room that I've had under Beanstalk, we've had a number of funds within the UK approach us because they're seeing this uptick post-COVID in the UK, and I'm sure this could be translated across internationally, that within the UK we've seen sales of veggies go up by 30% because people aren't going out to hotels and restaurants because they can't. They're staying at home, they're scratch cooking, they want to get better, they don't want to eat rubbishy food. So we're seeing this big uptick, and that's got a number of companies who've never been in this space before, very excited about the potential. And within the UK, we created our Brexit scenario, and we have, it's about 80% of our salad cropping is actually exported in. So if we could grow that ourselves, there's huge potential, but it needs investment. And so that's why we're seeing a number of pension funds coming into this space. But Craig, from your perspective, if you met someone at the rugby or at a dinner party or on a networking basis, and they say, well, what's the attraction, Craig, investing in agriculture? Is there a long-term margin to be had, or is it a wasted space, or what would your response be, please?
Yeah, so I left my last company to set up Persea.
I apologize.
Yeah. Persea is a genus of evergreen tree, by the way, of which the most famous is Persea americana, which is the avocado. So investing in agriculture, let's just take a step back. So maybe for some terminology, ag investing, we can talk about farmland, which is the primary production, and that farmland investing, on three categories of permanent crops, and then row crops, timber. Permanent crops are your trees, vines, and bushes. Typically, your nuts, your citrus, literally avocados, one harvest or two harvests per year, but long-term growth. row crops are your annualized crops, your staples like your wheat, barley, sorghum, corn, etc., and obviously vegetables. So let's just get that terminology out the way. From an ag investing perspective, we have seen, at the end of the day, it's a sector that is the necessity for life. I mean, we've all got to eat, but it doesn't sit as an investment class. If you look at stock exchanges, the typical terminology or the sectors would be energy, mining, retail, real estate, financial services, technology. You don't see a sector, agriculture. It kind of gets absorbed in amongst consumables, etc. But what we've seen, certainly after the financial crisis of 2007, 2008, we started seeing a surge of investing in the ag space by institutional investors. They were looking for, through the financial crisis, you saw a lot of disruption to the markets, etc. And while other asset classes were contracting, the food sector was steadily just carrying on. And institutional investors started looking to diversify their portfolios via allocation to assets that were not correlated to the financial markets, enhance wealth preservation, and provided a hedge against inflation. So the surge of investing happened into the ag sector by institutional investors, fund managers, etc., looking for that sort of preservation of capital. Because if you look at the trends of farmland investing across the globe, they have been consistent. They're very low volatility in returns, but sort of it's also underpinned by some other compelling themes. If you look at the world's population, 7 odd billion today, forecast to reach 9.7 billion by 2050. So there's significant growth in the need to feed the world. Inelasticity and demand for agricultural products through periods of global economic crisis, as I mentioned. So low volatility in returns, and additional opportunities for growth, capital growth in the farmland values that you're investing in through productivity enhancement. And we're seeing that, as technology catches, as the ag sector catches up, or technology catches up with the ag sector. Ag sector has traditionally been quite behind other sectors in terms of application of technology. So as these technology, ag tech you start getting enhancement of yields and quality, application of biotechnology, machine learning, AI, robotics, etc., we'll see an increase in value. And institutional, and also ag plays a role in institutional investors looking to enhance their sort of environmental, social, governance objectives, impact and carbon footprint investing, or reduction of carbon footprint in investing. So that surge, carried on through since over the last 10 years, and we've seen enormous activity. Something that I've been really curious about, and who were these investors and what kind of capital was going in. If we look at COVID, the pandemic, it just reinforces that investment case for agriculture as an attractive asset class, because if you think of any sector that has ridden this pandemic wave successfully, it's the food and ag sector, and particularly the fresh produce sector.
So Craig, you don't see it as a gold rush. You don't see it as a false dawn. Because I forgot actually about the previous crash and that investment. Do you think this investment is here for the long term, or these investors a bit like sheep that they'll just follow, run off to the next thing 2 years down the line?
Well, the risk is that big institutional investors start to swamp certain produce sectors, and you get an oversupply. So there is that risk, but these guys are not idiots. So they will be looking at commodities or produce classes that have got a long term trend of consumption patterns and so on. But what I'm getting to is a report came out recently. I think it's called the Global Ag Investing Rankings and Trends Report 2019, developed by HighQuest Group in the US, which was a fresh look at what assets are under management by institutional investors globally. In the past, there were a few attempts and they weren't that definitive. And I'm not saying this is definitive, but it's a really fresh look, new look at this ag investing space. And they surveyed, I think, 700 investors to get a sense of what kind of assets were under management. And so institutional investors, fund managers, impact funds, etc. The estimate is that there's about $131 billion that has of assets under management globally, and
wow,
that's a large number. And so yes, there's a lot of capital that is sitting or has been invested in the sector and continues to be now, will continue into the future, I believe. The key, maybe some other facts that came out of their report. The top 30 of these institutional investors account for 68% of that total assets under management. So they about 88 billion in 2019 is apportioned to 30 investors.
And Craig, those 30 investors, are they new in? Are they new kids on the block, or have they been around for the last 10, 15, 20 years?
It's hard to say. I can't answer that. But who are these people? Large institutional investors owned by pension funds. One of the largest is their majority shareholder, or their sole shareholder is American Teachers Fund.
Yeah. Okay.
Which is that's $1 trillion asset under management fund. They set up a company called Westchester, which targets farmland investing. I think they've about 8 billion assets under management in farmland. But the 30 farmland investors have over close to 20 million hectares of farmland under management, dedicated to permanent crops, row crops, specialty crops, etc., etc. But what we're seeing is, of those top 30, very few have got a focus on Africa. The majority of them are focusing on North America, Australasia, South America, and the only two in that top 30 that I can see that has Africa on its geographic focus is the FMO and the IFC. IFC being the World Bank investment arm, and the FMO being the Dutch Sovereign Wealth Fund.
So can I just go back a little bit, just to give an example from the UK? We have the Lord Dyson, founder of the Dyson Engineering Group. That's if you've got a Dyson Hoover or Dyson appliances. And we picked up that all of the investment and profitability, they're looking to direct into agriculture. And initially that's on a UK and European basis. And it'd be fascinating to know what was the trigger point for that individual and that group as to why they want to head towards agriculture. Is it for financial gain, or is it to do good, or is it to do both? But we'll see if we can get a contact from Dyson on one of our next broadcasts. So if an investment fund came to you and said, Craig, you're our expert of choice, we want to invest in agriculture, fresh produce, this is the size of the investment we're looking at, would you be advising them to look at Africa, or would you steer them away?
Well, it all depends on their appetite and what the crops they're looking at. Listen, Africa has got huge potential, and maybe we'll get into that just now. But as I say, currently in Africa, and there's a bandied around statistic that Africa, or sub-Saharan Africa, has got 50% of the world's arable uncultivated land, and that might be true. I don't know the facts of that, but in certain areas, it's very difficult to go and farm there because you almost need a pioneer.
Wow.
But certainly there's numerous countries in Africa that have got infrastructure and are set up as attractive destinations for investing. I mean, we can talk a long time about what are the things that you've got to look out for, but I think the general narrative of international investors when it comes to the subject of investing in agriculture and Africa in the same sentence, there's a bit of nervousness. That narrative needs to change. I think there's an education that has to carry on. And there are huge opportunities. Yes, there are risks, but in certain areas in Africa, there are plenty of opportunities. So, yeah, I think I did a lot of work with one of the DFIs, CDC. They were looking to allocate a lot of capital into Africa on high value crops, permanent crops, and spent quite a bit of time developing a strategy for them. So currently the main investors, and we talk about investors, long-term patient capital investors, are sort of limited in parts of Africa to a lot of the development finance institutions. So it's the likes of FMO, IFC, Norfund, and a whole other range of, and they're doing good work. And I think that catalytic activity, alongside other impact funds, I think we'll start to see a lot more activity in Africa in the next 10, 20 years. Well,
okay, so I'm using my slightly unprofessional phrase again of sheep, so that as people see, as these funds see other funds doing well within Africa, they might then be encouraged that if someone else has taken that risk and actually won or succeeding, that they might look to follow as well.
Absolutely, but remember, a lot of these big institutional funds look to allocate large chunks of capital. They don't want to invest in small projects, so they'll be looking at large projects. I mean, a 1,000-hectare development is of avocados or macadamia, excluding the cost of the land, is you're probably looking at an investment of anywhere between $30 and $40 million.
Okay, wow, okay.
Which might sound a lot, but not to them, those big institutional investors. But regardless, is for Africa to really develop their agricultural opportunities, and I'm not talking about staple crops for local consumption, but the opportunity for agriculture for export. I think this is an opportunity for Africa going forward. South Africa has got a very well developed agriculture for export industry, particularly on the high value crops. So, I mean, you'll see it on the shelves in the UK, all over.
4.5 million tons traditionally exported every year from South Africa on an international basis.
Yeah, so South Africa stands, and there are other pockets in Africa that are very successful, the agri for export model. Ivory Coast, for instance, Ghana, Kenya. But you've got a whole range of other countries that have got enormous potential: Mozambique, Malawi, Angola, going up into West Africa. Huge potential, but there's a lack of long-term patient capital. And particularly for these high-value permanent crops, you need patient capital come in equity rather than debt, because of the time lag of your investment might be taking 5 years to start generating cash. So debt is not the solution. So you're looking for these long-term patient capital investors. That's where the likes of the DFIs are playing a significant role. But we are seeing a shortage of local fund managers and institutional investors providing this sort of capital. And remember, the DFIs also don't want to be majority shareholders, bring in the catalytic capital, but I think there's opportunity for other investors to partner with the DFIs and develop fantastic projects.
So Craig, it feels like there's got to be a promotional piece for Africa for inward investment. I was just looking at the Daily Telegraph this morning and an article stating investment in agriculture is Africa's best hope for bouncing back from COVID-19. The majority of Africans work in some form of agriculture, will continue to do so for years to come. And across Africa, growth in the ag sector is at least twice as effective at reducing poverty than growth in any other sector, et cetera, et cetera, et cetera. But does that then cause its own problem that if there's potential investors that should be looking at Africa, they just see it as it's like going back to Band-Aid. It's just a charity case, but it's not. But it's so you're promoting larger block units with larger long-term investments, and these smallholders, can they be brought into that as well?
No, well, absolutely. I think the solution for Africa. I mean, we already have high levels of inequality and poverty and unemployment across many countries in Africa, and the solution isn't just to go and do a 2,000 hectare farm and put a fence around it and just employ the locals community, but to use that as a platform or a hub to create outgrow schemes and get them included in the value creation.
Well done.
And we're seeing really interesting successes on that. Take in Kenya, take Kukuzi. I don't know if you know Kukuzi. That's part of the Camellia Group. Large, multi-crop farm, avocado, macadamia. They were doing some pineapple at one stage, but their support for the smallholder avocado growers in Kenya is unbelievable. It's phenomenal, providing them a channel to market in Europe and supporting them with extension services to improve their quality and their yield. Yep. That's a great example of where a hub farm can provide support for smallholder farmers. Westphalia has invested in, pioneered an avocado farm in Mozambique. Fantastic investment for them. Very tough. Going out there to pioneer, find the land, you've got to create your whole ecosystem in terms of support structures. But engaging with smallholder farmers, providing them with lychee trees. So they've created a lychee smallholder project that is a booming success, or I expect it will be in time. I think their first harvests have come through. But for Westphalia, the avocado investment there, it's in a great harvest window. In fact, it's an early season, so from January, February, they're harvesting. So this is a gap in the harvest window that they're not even looking to export to Europe, but they're exporting to South Africa and other countries that at a really attractive return, back on farm return. I think
Craig, just coming back a bit, a couple of weeks ago, I had the pleasure of hosting a conference session for United Nations ITC International Trade Center, She-Trades. So She-Trades is set up to look to get more women involved in farming from the field up. And we managed to get a great guy, Jim Jeffcoat, who's ex-technical director for Asda and Walmart in the UK and the States. And one of the main buyers from Pick and Pay in in South Africa, and a lovely grower, avocado grower from Kenya. And the bit just to sort of join the dots, what was really useful about having the buyer and the ex-technical director was they giving us the retail perspective, that there is a view that retailers don't want to get involved in these sort of growers or schemes, but they do. It was actually the other way around. What we learned from that broadcast was that if those smaller growers can find a trusted partner, not a middleman, and this is what the retailers were saying, don't find a middleman because they're just adding cost. If you can find a trusted partner who's already got that route into market and grow with them, that's the way to go. So for these, just going back to this potential negativity about people looking to invest in Africa, that if you've got the likes of United Nations, ITC, She-Trades, and the retailers looking to foster those growers, those relationships, the point that you made about, which I think is amazing, being able to set up a unit and then assisting these outreach growers to feed in, you can just see how that model is going to work so well and so successfully for sustainability, for long-term growth, and also for the long-term growth of that fund.
Yeah, sure. As I say, the opportunities to go and establish a hub farm that then has the processing facility, provides sort of cultural support activities to the outgrowers or the smallholder growers in the area. And that would be extension services, pest management. If you've got a 5-hectare block of avocados as a smallholder farmer, that's a great opportunity for a family to have a really good sort of living income. But they won't have the facilities or the capacity to invest in maybe the equipment. They might not have the skills to know when to spray and so on. And that's where the hub farm can provide these additional services. So as I say, that's, the DFIs and impact funds are very keen to support these kind of projects. And they're not easy, there's no doubt, but certainly it's one part of the solution, I believe, for Africa really creating an attractive agri for export model in specific countries. Now, there's obviously challenges in that in terms of logistics. So there's quite a few things that have to come together. Climatically, large parts of Africa are very suitable for sort of fresh produce and a range of fresh produce. It's a subtropical, tropical area, but there's certain things that have to come and improve: logistics, warehousing at port, coupled with the obvious things of socio-political stability and government support. So if we let's just take a look at a country like Peru. So I don't know if too many people realize this, but Peru is now a powerhouse, global powerhouse in agri for export, particularly along a range of high-value crops. In 1990, it was a failed state. Hyperinflation of 7,800 odd %, debt to equity ratio of 189%. Net food importer. I think their ag exports in 1990 were about $200 million. This was on the back of, Peru's similar story to a lot of South American countries, similar parallel to Africa. The impact of colonization and coming out of colonization and democracy, and there was a coup I think in the late 1960s, and socialist government took on and trying to correct the wrongs of the past. So one target was land expropriation, and so established commercial farms. There was the Land Reform Act or the Agrarian Reform Act, and a lot of these farms were redistributed to communities and so on. But there was some success, but quite a lot of failures. And over time, through a lot of other crises that have impacted Peru, the economy collapsed over time.
Yeah.
Come 1990, new government comes in, Fujimori, and they reverse this Agrarian Reform Act and open up for private investment again. They really established policies and government support programs to really attract foreign investment and open up large tracts of land for investment in agri. They drove the strategy of this agri for export model. If you go to Peru, it's a fascinating place. I mean, there are three key areas. You've got the Costa region, which is this coastal belt, which is very much, it's desert.
Yep.
You've got the Selva, which is in the Amazon basin, and then you've got the Sierra, which is the Andes Mountains. But that Costa region, apart from the river valleys, mostly it's desert, 10 millimeters rainfall a year. Climatically, from sunlight hours and temperature, really suitable, but the soil is sand, it's like beach sand. But the government invested, I think with World Bank support, large irrigation schemes coming down from the Andes, out of the snow melt and glacial melt, down into the Costa region, created these irrigation networks and sold off large units of land, 1,500 hectares, 2,000 hectares, and investors climbed in. And it's a fascinating success story, because if you look, I mean, some stats, I'll just throw them off the top of my head. But, these high value crops, avocado, table grapes, citrus, mango, blueberries. If you look at the growth of that, of Peru, and remember, this was a failed state in 1990, between 2008 and 2018, in 2008, Peru's exports of avocados were about 50,000 tons.
Okay.
South Africa was 54,000 tons. 2018, Peru's exports of avocado were in excess of 300,000 tons.
Wow.
South Africa's was 85 or 89,000 tons.
Wow.
So it's and South Africa's done really well on avocados. But what I'm trying to illustrate is that with the right government policies and support and security of tenure for investors, they climbed in. And in 2018, I don't know what the latest stats are, aggregate exports for Peru were just over $6 billion.
Crikey.
$200 million in 1990. So it's a great success story. And that success story is repeated in other parts of South America.
Yeah.
So Africa.
Yeah. If that model could be duplicated to Africa.
Well, I hope policymakers in Africa and the different countries can go and I'm sure they are going there and learning from it. But there's a few factors that have to come together. And one of them is, the things that will address the concerns of international investors, and that's land security, tenure, government support, and education. Where are the farmers of the future coming from for Africa? Farm managers.
Yep. And Craig, can I just give you a direct example? Go back to Africa. There's an amazing business, Blue Skies, that was created some 25 years ago. Amazing guys. So my hero, Anthony Pyle, MBE, in his early 50s. Sorry, Anthony. He went out to Ghana and having never been before, and cut pineapples under palm trees with locals. And move it forward to present day, they're now a £150 million business with sites in Brazil, Ghana, Egypt, and South Africa. They've just opened they're about to officially open the site in Benin. And speaking to Anthony on one of my interviews, he said that in some ways he wished that he'd opened at the same time in Benin, because they literally have had the red carpet treatment that the president of Benin is going to be opening the site, which is sort of an indication as to the relationship that's been created with them, to be able to create that success in Benin. So as per that example that you give, Craig, of countries being very welcoming to external investment, if it's going to be coming in for the long term. A brilliant example there with Blue Skies. Yeah.
So there's lots of success stories, and I think on this show going forward, we should go and interview some of these characters who have cracked the code, and we can learn from them, get those good news stories out, change the narrative.
Because this is. So, but again, it's just this. Go back to that point I said earlier. It feels like there's going to be this promotional drive for people to get so excited about Africa and not really. And just not have this view that it is corrupt. I did a lovely catch up with a great guy, Steve Maxwell, who's based in Mexico, and he was saying how Mexican fresh produce is on the up, and there's the potential for people to now serve the US market by going through Mexico. But the thing that came through time and time again was the corruption and the aggressive corruption that's happening in Mexico in comparison to the likes of Africa. And one thing that we haven't mentioned in too much detail, Craig, is that we talked a lot about growing in Africa for export, but 10 of the fastest growing cities in the world are in Africa. So there's all that inward trade as well.
Sure. Well, I think there's a few features to that question or comment. World population 7.4 to 9.7. The large majority of that is coming out of sub-Saharan Africa. that growth. If we look at if we look at the sort of median age by continent, Europe's median age, I think, is 43. Africa is 18.
Wow. Okay.
So we got this explosive growth coming, and a lot of developed countries around the world, their population growth is very, very flat. Growing very slightly. And so if you're a company in Europe or North America and you're looking for growth over the next 20 years, if you don't have Africa as on your sort of radar or your growth strategy, I think you're missing something. And certainly, China is doing a lot of work, doing a lot of investment in Africa. There's, a lot of questions around some of it, but they're here. And so, yeah, I'm really upbeat about the ag sector in Africa and just generally the growth opportunities in Africa across the board. A lot of, there's an often bandied sort of statement that Africa is in deep trouble. It's a net food importer. And, it's a bit of a misnomer. Yes, it is a net food importer, but so if we're looking currently, I must just get my stats here so I don't tell a fib.
This is the bit I don't understand where this negativity about Africa has come from.
In sub-Saharan imports in 2019 were $43 billion, but they're not rising. They were rising from 2000 to 2010, but the last 5 years they've kind of slowed down a lot. The last 8 years has been pretty flat, but sub-Saharan exports are also rising. So averaged $35 billion over the last 4 years.
Yeah.
So not too far removed, but the imports are very heavily weighted to a few countries. So Nigeria alone imports $5 billion. So the countries that have got high mineral wealth, are weighting the imports quite heavily because they've got this positive balance of trade through their mineral exports. They're quite happy to import rather than promote agricultural development. Angola is another one. And then there's some failed states, obviously, Somalia, but there are 4 countries that really overweight the imports.
Yeah.
Africa going forward, very little exports are intra-Africa because of the difficulty with trade barriers and border crossings, etc. And that we expect to see much improved with this, what do they call it, the intra-African, so the African Continental Free Trade Agreement that's been passed now, that allows for tariff-free trade between countries. So so there's positive moves.
Craig, some of the concerns that you've worked with previously, like the CDC, and one thing I've learned over all these broadcasts is this word collaboration, which I think also means sharing the risk. Do you think the likes of some of the organisations that you've been associated with, would they be keen to collaborate, partner with other funds, so those funds aren't going in blind and there's already a track record, there's already the connections, the process in place? Would they be keen to collaborate?
No, for sure. Okay. We're seeing that already. I mean, I know of a number of commercial farming entities in Africa that have a number of DFIs as equity partners, and providing appropriate debt and mezzanine capital as required. You've got quite a number of commercial operators that are doing great work into Africa. Crooks Brothers in South Africa, listed entity, established a 400-hectare macadamia farm in Mozambique. We've got Westphalia doing this avocado project in Mozambique. And there's multiple other entrepreneurs, NeoFresh doing a large papaya operation, and other fresh produce, a basket of fresh produce in Mozambique. seeing a lot of activity, obviously, in Zambia, Malawi, Tanzania, Kenya, and then I think you know better than me around West Africa, the likes of the blue skies. And but you've got a lot of these entrepreneurs, these pioneers that are willing to go out into difficult places, and not difficult because of corruption or socio-political uncertainty. It's more about pioneering, establishing the whole infrastructure. Yep. And these are the guys that we need to support. They're looking for those investors, those patient, long-term capital investors. And it's not easy to go and get debt, as I said, gearing in some of these countries. You rather need a long-term patient capital investor. And so there's multiple opportunities for investors that are looking for, for good return, and create a positive impact in these countries to get involved.
So Craig, 2 points on that. If a company's coming in to make long-term investment, I'm slightly putting you on the spot, but do you think they'll see a reward from that long-term investment?
For sure.
Okay.
Well, I mean, you got to choose your crops, but if you look at avocados, we'll give some examples. We know what avocados have done I speak I heavily weight these conversations towards high value crops or permanent crops because I'm talking about the agri for export model, which is dollarized, so it's heavily geared for export. So you've got the sort of hedge against local currency deflation and protection of your investment, because you're investing dollars into a project. You want to get dollars out in the end. But certainly there's a number of crops that you can do at large scale, but it depends on which countries, climatically, logistics, setups, and so on. But avocados, if we look at avocados over the last 10 years, the growth in consumption or supply has been huge. I don't know the statistics offhand, but I remember when I first got into the industry, 2011. 2012, if 1.5 million cartons of avocados arrived in a week in Europe, the traders would be panicking. It's like, the market can't absorb this. 8 years later, or this year, to have a 4 million carton week won't be unusual.
Yeah, fascinating.
And the price is not much. Is remained bullish throughout these periods. In fact, and I don't know what the current stats for last year were, even through the COVID and the sort of demise of the food services and restaurant trade through the pandemic, those volumes were absorbed.
Wow.
The average price through the year probably low. Well, it was certainly lower than the year before, but the year before, with that excessive growth, were significantly higher for a gross selling price than they were in 2012. So what is the runway left for these crops? You've got to look at that, and which are the markets that country's got access to?
Yep.
Is it Europe? Is it the United States? Opening up in China? Yep. If we look at the other crops that maybe are not as fragile as avocados, the nut sector, the tree nut sector, macadamias is doing particularly well. It only makes up 1.5% of the total tree nut basket globally. Yep. Almonds, I think, are 36%. Macadamia is 1.5%. It's a lot harder. You don't have to. Your logistics challenges are not nearly as difficult as your soft citrus and your fruit. And so we're seeing a lot of activity in that. And so your returns, if you look at your business models, your return over a 20-year period, this is all based on a dollarized crop and your assumptions on market prices, but you're looking at returns in excess of 20%.
There you go. So that was question one. Will an investor on a long-term basis make a return? The answer is yes. Question two, I've got a couple of funds who wanted to see sight of this recording of this podcast. If a fund is coming to you because they're now intrigued by Africa, would you be able to help them?
Well, sure. I mean, that's what Persia advises. That's what we work with business owners, investors, be they institutional fund managers, family offices, and government agencies. That's this is what I get excited about. Why? It's like contributing to the sort of significant and sustainable growth of the ag sector in sub-Saharan Africa. Yes, I've had experience in Europe and South America, North America, but yeah, I think being based here, I'm really looking to engage with investors looking for opportunities. So the services we supply are really around strategy, market entry strategies, growth strategies for current businesses, diversification, feasibility studies, capital raising, capital sourcing, deal sourcing, due diligence, market intelligence, etc.
Well, Craig, it'd be fascinating with future broadcasts if we could actually get some key individuals from funds in that perhaps have already invested in Africa, or someone who's a bit skeptical about it and wants to find out a little bit more, is happy to put the head above the parapet. But let's see how we get on that front.
I'm excited for the series, because I think you use the word expert in my bio quite liberally. I'm more a generalist, but to bring in some of these experts, the guys that have walked this road, be it in a Tanzania, Malawi, a West Africa, what were the challenges, what were the opportunities, and how did they evolve, and what was the essence of their success? I think changing that narrative, getting good stories out, and also bringing in investors and that DFIs, and I think talk about the opportunities for impact investing, et cetera. So I'm really looking forward to the series and bringing in sector experts to share their stories.
Well done. And
also, people that are starting projects and looking for investors to showcase them on the platform.
Yeah, well said. And Craig, just before we wrap up, as I said in my intro, the planned Dole Food merger with Ireland's Total Produce. So that's going to give a combined, just looking at my notes, combined entity that will be the largest fresh produce supplier in the world with 10 billion in revenues. Do you think we're going to see more amalgamation, consolidation, collaborations such as this as we move forward?
Yeah, I mean, it's an interesting move by them. Dole and Total Produce independently were significant fresh produce players, with quite a bit of overlap, I must say. So this merger, listen, Total Produce already owned a significant portion of Dole before.
Yep. But
I guess this merger, they're looking to create some kind of additional value through streamlining or reducing the duplication of assets and so on. In their notice to the market about this merger, it wasn't lost on me. It's about a 20-page document, but it wasn't lost on me that the word synergies is mentioned 21 times. And so the thesis for this merger is clearly heavily around the synergies that can be created, and this new entity getting a kind of a kicker on the value released out of these synergies. And that will be through their supply chain, consolidating warehousing, sort of services, et cetera. And unfortunately, with these kind of things, there's in job losses and so on. I wonder if a consolidated group will be good for the industry, or will we even notice?
Do you think if COVID had not happened, do you think the merger would have still occurred?
Well, those kind of companies, particularly Total Produce, I think Dole has other assets in farmland, and I think they've got a shipping line. So they will have a different margin breakdown, but both are very low margin. I think the combined entity is looking at just over 3.5% EBITDA margin, which is very low. Carrying some debt, you can imagine, limited ability to gear these businesses, working capital, based on we know this. Marketing of fresh produce is a low margin business, and so I think the thesis around merging is being able to streamline this duplication that they have of assets, reduce their and through this capital raise maybe de-gear their balance sheet and bring in fresh capital for growth. So I can understand the thesis around it. But these multi-diversified fresh produce distribution companies, they're tough to manage because of the diversity and price volatility versus companies that are niche. So as I say, there's not many listed companies in this space, but Mission Produce, which, the largest avocado marketer globally, American-based, was privately held, established by three gentlemen: Steve Barnard, Jim Donovan, and Papa. I never knew his name. I met him a few times. Lovely chap. Wonderful people. And they founded this 30-odd years ago and focused on avocados as a marketing company. And over time, they evolved upstream into growing. So they was invested in farming in Peru. Very successful company, largest market of avocados globally, but heavily, mostly in the US and into Europe, and they've pioneered a channel into China. But they've listed now, but it's a niche. They know what they are, an avocado business, and the market has really, sort of embraced their listing. So I think they listed at $13 per share, give or take, earlier last year. Now trading at $21, $22.
Wow.
So, I mean, ironically, I see they've just launched their mango category.
Yes, I was going to mention that.
Yeah. But there's great alignment between avocado and mango, particularly with their farming in Peru and their packing operations in Mexico.
So just had you not given me an example previously of in a wall somewhere in the headquarters, they got all of the other sectors that they try to get involved with, and that was up there as I've had the
pleasure of visiting Mission on a couple of occasions, and very welcoming company. They sort of, you just want to be in a room with the three founders because you just get excited about agriculture and fresh produce, and particularly avocados. But they had in their lifetime avocado business, and they tried to diversify. And they showed me their wall of shame. They call it the wall of shame, which is the pictures of their mistakes of getting too far removed from their core business, which is quite an interesting lesson. But you've got would I invest in a diversified fresh produce business like the new Dole, which the brand will now be Dole. Total Produce will fall away. Listen, this is still subject to a whole lot of things. It might be binding agreement, but it's still subject to Competition Commission, all sorts of other processes. But it will be Dole. Yeah, I like the Mission model. I like these niche operators where the culture of the business is you're really reliant on your grower partners. And when you are an expert in a niche, you can add true value to your grower. When you're so diversified, are you able to provide that real? You become a bit commoditized.
Yeah.
This is my opinion.
Well done, Craig. Thank you. I think this as a first outing, it's been fascinating, and for all the right reasons. We've been very biased towards Africa because of your expertise. It'd be very interesting to see what these funds think that I'm going to send this podcast onto, because they might be knocking on your door come Monday morning. That'd be fascinating. But let us explore this further, this podcast, and see if we can get other individuals in, so we can explore this global sector of fresh produce, investing in fresh produce internationally.
And we've spent a lot of time on farmland, primary production. But the other areas that there's lots of other areas that make up this ag space in fresh produce, and it's downstream processing, value adding.
So ag tech.
Across this value chain, there's opportunities across this value chain for investing, processing, value adding, upstream in terms of nurseries, cultivar, intellectual property, agri support services. In countries with high production costs, for not where labor is not readily available, that they've had to mechanize a lot. So their agri support companies, they come and do the harvesting, the spraying, very lean permanent workforce on these farms, and there's opportunity for that. Ag tech is a whole new space, and that's a booming place. Venture capital companies are jumping all over it. Yep. So yeah, we won't be just talking about farmland.
The future is so bright, we've got to wear shades. Craig, thank you very much for your time. And
thanks, Max.
Don't get too hot out there in beautiful South Africa.
It's about 28 degrees today. It's fairly warm.
Compared to our 2 degrees of a grey March day in the UK. Craig, thank you very much. Look after yourself.
Cheers, Max.
All the best. Bye. Bye.